Good morning everyone and welcome to another RF Crypto video. Today's markets have gone up by 4.1%. The global crypto market cap is standing at 1.13 trillion. It's showing a healthy sign of recovery. The prices are going up. Bitcoin finally made its way out of that slump of 22,000. Now it's trading at 24,125. Ethereum is also inching closer and closer to the $2,000 level, jumping by a whopping 8% over the last 7 days. Avalanche has gone up 27% in the last 7 days and 12% just in the last 24 hours, and we'll speak about why this happened in just a bit. But the rest of the market seems healthy. Last 24 hours, most of the coins have gone up. We see some coins going up in double digits like Neo Protocol, Chainlink, and as well as Flow. So it's a healthy sign. It's a sign that the markets are recovering well. But there are some caveats to this. It might not be long-lived, or if the socioeconomic and political situation globally improves, then it might be sustainable and we might see prices going up to 30,000, but it's only a matter of time until we find out what's going to happen. Looking at the price of Bitcoin, we see here that the prices are trading between 23,000, which is the support level now, and 24,500, which is the resistance level at the moment. And the prices are inching closer to 24,500, and analysts are saying now that if it breaches this level, it'll head up to 25,000, and once it reaches 25,000, it'll be a runaway effect up to 28,000. And let's see if this happens. The trends are pointing to 28,000, but as well as if we see news that the markets aren't reacting positively, inflation data is quite negative or worse than expected, then we might see this opposite effect where the prices go down. But for the moment, we see here that the prices were around 20,000 on the 26th of July, about 12 days ago, and it jumped all the way up to 24,500 in just a matter of 4 days, which is quite a positive sign for the market. Now let's look a bit into Bitcoin and 5 things that we need to know about Bitcoin this week. These factors are going to tell us in what direction Bitcoin will move, and it's all of the trends that put together give a bigger picture on the movements of the cryptocurrency. So can the bulls win out? Momentum appears to be strong across crypto. We have seen this. In the last 7 days, the prices have gone up quite significantly, but we also have a host of potential stumbling blocks that lie in the way, which mean that these are obstacles that might push the prices down. So sellers show no signs of budging to allow reclaim of levels above 25,000, which means that the sellers or the bears in the market, they're not allowing the prices to increase. It's gone up to 24,000, but it hasn't gone up much above that due to the fact that bears are pretty strong in the market now. Their selling pressures are quite aggressive, and at the moment we see that there is still negative sentiments in the market, and that's why the prices have been stabilized at a lower level. People were expecting it to be 20,000, and because of the negative factors affecting the market, it hasn't gone up. So Bitcoin seals second week above key bear market support. Instead of declining at or immediately after the candle close, Bitcoin instead began gaining, and these gains included an impressive hourly candle where $500 were added to price in the space of 1 hour, and this constitutes Bitcoin's highest weekly candle close since June, a firm break from the previous weekly downtrend. Also, Bitcoin's price defended its key 200-week moving average 2 closes in a row, cementing the likelihood of that trend line now forming a support, which means that now the support level at the 200-week MA or moving average is sitting at around 22,900. So if the prices fall, it means that it will fall, but it won't go below 22,900. Before the support level was at 18,500, then it went up to 20,000, and now it's up to 22,900. So the prices might fall, but a good time to invest, I believe, in my opinion, is if the prices fall down to around 22,900. If it falls to 23,000, I think it's a good time to invest because it won't go much lower than that. Also, there is a possibility that the prices will again increase and stabilize between 25,000 and 28,000, with traders' expectations being at a retest of 30,000, meaning that the prices will increase to 25 to 28,000 more likely, and it will try and test the $30,000 level. Like it might increase to $30,000 for a while, like 2 or 3 hours, and then back down to between 25 and 28,000. And this is a test. If it passes the test and if it goes above 30,000, then it's uphill from there. And that's when officially the bear market will be over. The midterm target range, so between 6 months and 2 years, is 38 to 40,000, because there is a descending resistance level area. And if this happens, it will form a pyramid in the charts, or a closing. So it will be like this, where the price will converge and then it will just shoot up. So it might shoot up to 30,000 and then again to 40,000 in the midterm. And from there, we can see upward movements back up to all-time highs. But this is not very likely because US inflation picture is complicated by falling commodities. CPI is anticipated to be at 8.7%. And if that comes back above 8.7%, the prices are going to collapse again, because extremely high inflation is never a good sign for the markets. But the question is quite complex, because fuel prices began decreasing in July, while CPI components such as rent prices hit all-time highs. And despite the fact that fuel prices decreased slowly, and they didn't decrease by much, rental prices have exploded. And rent is a lot of people's highest expense and constitutes a big part of the CPI basket, meaning that if rent is increasing so significantly, then inflation will also increase significantly. And that will cause the reversal of this mini bull trend that we're in right now. But Elon Musk has said that decreasing commodity prices is going to lead to a decrease in inflation. But as we saw before, a lot of CPI components, and these are important CPI components, are going up quite quickly. So we don't know whether it will be 8.7% or higher. So old hands hodl on. Hodlers are unmoved by the latest upticks in Bitcoin price action after months of decline. So people who are holding Bitcoin have not sold their Bitcoin despite the prices increasing by more than 20% since June. The amount of Bitcoin supply last active in the past 24 hours is declining on average, reflecting a lack of knee-jerk reaction to price moves. So there is a sort of belief in the market between these hodlers that the prices are going to increase significantly going forward, and they're holding on to their Bitcoin. On-chain transactions have reached 1-month lows, and the portion of the Bitcoin supply which has stayed dormant in its wallet for 3 years or more continues to increase, reaching new all-time highs of almost 38.5% on the day. All of these trends point to the fact that Bitcoin holders are holding Bitcoin, they're hodling. They're not going to sell just for 20%, they're looking for 3, 4, or 5x. So a lot of these people bought at certain amounts. A lot of them bought at 40,000, a lot of them bought at 30,000, and a lot of them bought at 20,000. Now they believe that the prices are going to increase, and that's why they're holding. They believe that they can make a profit, and that's why they're holding. There's also another sort of negative outlook for the market. Current conditions appear to be firmly lackluster for exchanges amid little genuine interest in buying crypto assets. There is a crazy imbalance between bids and asks, indicating that the majority of exchange users are waiting for Bitcoin to match its June's lows of 17,600. So sellers are trying to sell at the current levels of 24,000, but the buyers are waiting until the price drops again. And this crazy imbalance is usually a negative sign. It means that there's a lot of selling pressure in the market or a lack of buying pressure in the market. And this might cause the prices to go down again to match what the traders want and what they're expecting. And it is a mix and match. Once again, we look at the positive side. Fear is getting out of the market. We were in extreme fear in terms of the fear and greed index. However, now this index has gone up and it's at 30, which is fear. It's not extreme fear. So people have become more open to investing in crypto, and this has caused the prices to go up. And it's a cycle because less fear causes people to buy, which causes the prices to go up, which causes even less fear. And increased confidence will cause people to shift their money from less risky assets to riskier assets like crypto, and this will cause the prices to go up. And this is probably why we see this peak here. We see this trend of 20,000 to 24,000 because of the higher risk appetite in the market. So Nigeria becomes the most crypto-obsessed nation after the April crash. The Nigerian population searched the term cryptocurrency, invest in crypto, and buy crypto the most among the 15 countries that are part of the research. So Nigeria's growing interest in crypto is fueled by inadequate financial services in the country, and Nigerians started using crypto as a viable alternative to store and transfer funds. The Nigerian banking system is quite irrational, and it's quite negative in a sense that it's expensive to open and run a bank account. Transfers get lost here and there. There's a lot of bureaucracy, and a lot of people don't have access to bank accounts. So they turn into crypto, which is quick, cheap, and convenient. You just need a mobile phone. And as soon as you have a mobile phone, you have yourself a sort of virtual bank account using crypto. And this is why the Nigerian population has been fast adopting crypto. And it's a good sign for Africa because it allows previously unbanked people to become virtually banked. So Avalanche jumps nearly 15% amid surging NFT volumes. So there is growing NFT demand on Avalanche, and this has caused the bullish price actions on Avalanche's token. Trading volumes on Avalanche-based NFTs have increased by 31% in the last 24 hours, and the total number of sales have also increased by 12%. Leading Avalanche NFT collection Navy Seal Game trading volume jumped 63% in the past 24 hours. And this is the time to be quite careful because a lot of these tokens like Solana and Avalanche and Polygon, they jump in price action when we see an increase or an explosion in demand for NFTs. And people think, oh yes, let me invest in this because it has a future. And then the NFT hype for the day or for the week or for the month dies down, and the prices collapse again to where they were before the massive increase. So I think just be very aware of investing in Avalanche, see what the trends are, see how the demand pairs off, and if the demand fizzles out, then the prices are naturally going to go down. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely. Cheers.